Hi, this is Stan Reinford, and welcome to today's market update for March 18th. So we're into Operation Epic Fury for about 2 weeks now with the Iran conflict between the joint effort with the U.S. and Israel. And the president spoke today and was asked at his press conference if the war is going to end quickly. And he said, more than likely not. However, we're going to do it the right way and make it a safer place for everyone. The markets did not react too well to that. And then we also had that today is Fed Day. And the Fed statements actually were not interest rate friendly. In fact, they voted to hold rates steady, citing possible inflation coming from this with ships sitting, not getting through the Strait of Hormuz and things like that. And along with the mixed labor market, that still didn't help. And I'll get into that in a few minutes, but mostly because of the uncertainty of the Iran war. Only Fed Governor Moran was the only one that dissented. Oil has been fluctuating between $93 and $103 a barrel. Remember, it's down from the highest last week in the 120s. Remember, when oil prices rise, mortgage rates rise. So let's talk jobs. And again, we've got all kinds of alerts coming up here and things like that today, because if you look down here on the right-hand side, or down below, we're looking at today's chart. Remember, when we have green candlesticks, interest rates are getting better and going down or going sideways. And when we have red as we have today, and we've actually gone down quite a bit, we've gone down more than 43 basis points up here on the left-hand side on the 30-year Treasury. That means interest rates are increasing. So, and you'll see that today the candlestick, or all the way to the far right, is red and it's really long. That is what they call engulfing that previous day's green, which means that we're probably on a trend to go a little bit higher over the next couple of days. So we'll have to wait and see. Let's talk jobs. So the weekly employment report was released showing that there was an average of 9,000 jobs per week in the weeks ending February 28th that were created. So that's about 36,000 jobs for the month. One thing that I want to really get you to understand is that when you look at the main objective and to be considered a sustainable pace for the U.S. economy, we really should be creating 100,000 to 150,000 jobs per month. So we're far off, and we've been far off. It's one of the things that the Fed talked about today, but they still decided not to react anything to that. It's one of the reasons that Stephen Moran more than likely dissented there a little bit. So the average first-time home buyer has been increasing, and there's been a little bit of a debate as to what that age is between NAR, Redfin, and a couple of other places. They've been saying that has been approaching age 40. So from all of the research that the people that I follow and everything, yes, it's increasing, but more than likely it's in the mid 30s. However, that is above where it has been in the past for many, many years there. Prior to COVID, it was down below the 30s. So it's been increasing slightly there and everything. So just kind of keep that in mind, that as you're moving along, if you are a first-time home buyer and you're in that age category, there's a lot of benefits out there. I would love to jump in and help you and talk you through that. So especially if you have some investments in crypto, there's some strategies that I could show you how to get through that too. So let's talk the remainder of the week and what news is coming out. So again, today was Fed Day. Again, we'll have to wait and see from the minutes of what their projections are for 2026. And then also we have Friday this week, we have jobless claims and new home sales coming out. Let's talk interest rates. So interest rates are climbing a little bit here. Again, more than likely when these types of situations happen with foreign countries like this, it is generally temporary and it lasts 3 to 4 weeks. So we'll have to wait and see what happens. We keep having our moments of trying to get a little bit better, and then we have some more negative news that comes out that actually makes it go the opposite way. That being said, interest rates are still about 0.75% lower than they were a year ago. So rates are still good. So if you're looking at buying or refinancing, we can help you, especially if you're looking at buying. When interest rates do climb a little bit, it's actually a great opportune time to jump in because it actually sometimes have less competition out there, which you really shouldn't, but it's going to give you an opportunity there because then when rates do come down, more and more people will get back in, come off the fence, and cause more competition. So again, whether you're looking at buying or refinancing, we can help, whether it's a primary residence, second home, or investment property. Give me a call, whatever that circumstance is, or you're having some challenges, let me know. My team and I would love to help. Have a great week. Please forward and share.